All right, what is happening, everybody? Welcome back to another live stream, second one in the same day. Looking forward to it. We had First Sip in Crypto, of course, earlier this morning, 9 a.m. Had a great live stream. Thank you all for tuning in for that. If you were with us, welcome into this live stream. The results of the Fed meeting will be released here within the next couple minutes at 2 p.m. Eastern, followed by Jay Powell and the press conference over there at 2:30. So I've already got that queued up. We should be able to watch it right here live, 2:30 p.m. Eastern. So go ahead and hit that like button, guys, on your way inside. Definitely do that. Subscribe if you haven't already, and welcome in. We're going to learn a lot more about where we're heading here. And the big question, not so much today of what's going to happen today. It's really the question of what's going to happen the rest of the year and beyond today, at least looking out the next few months, right? That's going to be the big question. We're going to look to get an answer or some type of answer to that today and see, just how hawkish things look for our future here within the markets. So we are expecting to see 50 basis points move. That is pretty much been out there for weeks now, right? We'll see if that's already baked into the crypto market or not. So we'll have that coming at you live at 2 o'clock. And if you guys see something before I do, if you have results, I do have the Discord open too. If you guys can hit me up there if you guys see something. So what is going on, everybody? Larry Boomer, what is happening, everybody? Crypto sale coming up. Yeah, let's see. The overall markets right now are hanging in there. We're actually green on the day right now. We're up to a $1.84 trillion market cap right now. Bitcoin is hovering just below 39,000. Ethereum just below 2850. But yes, I am broadcasting live on Twitch now as well. I prefer Twitch, to be honest. This isn't a turning point for the market. Blah, blah, blah. I think I'm on Twitch right now. Yeah. I guess I am. I just heard myself twice. So there we go. Yeah, we are live on Twitch, live on YouTube right now. So also live on Twitch. Wilford's got it right. We started that up, and we'll be broadcasting live on both platforms now from this point forward. So Team Rexos, good afternoon. Thanks for keeping us updated. Definitely, man. Definitely. Sape King of Apes, what's up, Bobby? What is up, man? Down on everything. I hear you, bro. A lot of people are. Hey, Zach from Safety Ape. What's up, Malik? How we doing, man? Guys, hit that like button on your way in. We're going to learn a lot today about the crypto markets. So let's jump over here again. We're expecting to see some things at 2 p.m., which it's 2:01 right now. We should see some type of news here. Let's see. Fed meeting results. Let's see what we got here. What do we got? Latest. Let's see. Fed meeting. Okay, here we go. Federal Reserve hike rates by 50 basis points as expected. Let's see if this is just a good source. Okay, it is Global Financial Analyst. Okay, so we did get the 50 basis points as expected. Highlights of the May 4, 2022 FOMC rate decision. At the previous meeting, the Feds hiked it up by 25 basis points. Okay, at last look, the Fed funds market is priced at 90.5% for a 50 BPS hike and a 9.5% chance of 75 BPS. All right, so balance sheet runoff caps of B for treasuries versus as expected. Balance sheet runoff phased in over X months versus 3 months expected. Okay, so pretty much everything we've expected here. A little bounce prior to the Fed meeting. We were pricing slower rate of hikes or what? Let's see here. What else do we have? Balance sheet unwinding at $47 billion per month. Okay, so essentially we are getting what we expected to get. Here we go. What do we have? With all the talk on fighting inflation, the Fed's planned meeting this week will address raising rates. That's a done deal. It's 50 basis points, guys. And again, 2:30, we're going to stick around here. We're going to listen to Jay Powell and really get an idea of where we're heading from here. That's the big one. So we did kind of know that this was maybe baked in. Now, let's see. It's not really affecting the overall markets here. In fact, we're actually moving up a little bit. Let's see here. Let's refresh. Yes, we're moving up. Bitcoin's above 39K now. So we are getting some positive movement here. As Rob said right here, market is looking good. Yeah, it is. We are looking solid here. Ethereum back up over 2850 on the news. Jay Sierra, what's your prediction today? What's your expectation today? Well, so far, it's exactly what I expected, the 50 basis points. But now the real big thing is, what are they going to do in the future? And how much insight do we get there, for the future outlooks of the markets here That's going to be the big one, and we're going to get more information on that coming up during the press conference at 2:30. So markets are bleeding, but Safeway 8 moving up hard. Almost zero lost on 8. BSA broke all-time high again. Love it. Good news. I would just say it's the news we expected, Xavier. So far, it's the news we expected so far. So, yeah, to dump after 2:30. Maybe, Jay Porgy. It really depends on what becomes, the predominant theme of that meeting at 2:30, the actual press conference, right? What is the actual theme of that meeting? Is it hawkish for the future? What does that look like? So we'll see. We'll see. But we've got Bitcoin right now above 39K. So that's solid. We are seeing a nice little positive price action here. Let's see in some of the small caps. Let's see if we're getting any price action in some of the small caps. Nothing major here. Nothing major. Just about everything is where it was. Let's go over to the Binance side. Let's refresh. Let's see if we're getting anything. I wouldn't expect to get anything much off this. But yeah, Zeldaverse, Bandex, both up about 9%. Let's see. All right, let's go back over here. Let's see what else we can pull from here. Let's see. Fed meeting latest news, Wall Street Journal 19 seconds ago. Here we go. Let's see what they got here. Stream begins 23 minutes, so we'll have a live stream there. The Federal Reserve approved a rare 0.5 percentage point interest rate increase and announced plans to shrink its $9 trillion asset portfolio starting next month. Starting next month in a double-barreled effort to reduce inflation that is running at a 4-decade high. You know, we talked about that, what was that, about a month ago or so, that inflation numbers were reaching limits that we haven't seen in 40 years. Now, the moves announced after a 2-day policy meeting Wednesday will raise the central bank's benchmark federal funds rate to a target range between 0.75% and 1%. All right, so together the steps mark the most aggressive Fed tightening of monetary policy at one meeting in decades, aimed at rapidly reducing the economic stimulus that has contributed to rising price pressures. The Fed, which usually lifts interest rates in 0.25 percentage point increments, which is what we've seen in recent past, raised rates by 0.5 point in 2000. So we haven't seen this type of move in 22 years. It has been approved. It is going to be a 50-point interest rate rise. It says here the moves announced after 2 days. Okay, we already read that. Okay, we basically are just waiting for the live stream there in terms of that article. Let's see what else they're also adding on to this. Let's see here. Let's see here. We're getting the latest here. All eyes on 2 p.m. Fed release. What is this? What is this actually showing? Oh, okay. These are all the stocks. Wow. Look at that. That's crazy. Let's see. Yep. Does he show up dovish or hawkish on rates and balance sheet reduction? Tonight's Fed meeting is the last chance to buy before the results and announcements. Let's see what else we've got. Anything here? Let's refresh this. What's up, everybody? Welcome into the live stream, too. If you're new to the show, welcome in. Hopefully, if you're watching on YouTube or Twitch, you decide to subscribe to the channel. Shout out to anybody on Twitch, too. I'm going to get better with, giving you guys some shout outs over there, too. We are now broadcasting live on Twitch as well as YouTube simultaneously. That's pretty sweet. Okay. What else do we got here? Nothing really big. All right, so Bitcoin and other cryptos expected to consolidate more after the Fed meeting. So we'll see if they continue to consolidate, if we get sideways action. That's what happened last time. Let's listen into this little bit that came out yesterday from Yahoo Finance. As we await the 2:30 meeting, I want to take a listen to a few different things here. So we'll listen in here to why the upcoming Fed decision could be bad news for crypto. Let's see.
For the tech-heavy NASDAQ is down more than 20%. Bitcoin, however, is down double, more than 40%. And fears are the Fed will make matters worse this week when it raises rates an expected 50 basis points. David Hollerith covers the space for us, and he joins us more. David, why could this be a very bad week for Bitcoin?
Yeah, I think Bitcoin largely is being seen as a risk asset. And for the last year or so, it serves as a bellwether for the crypto sector more broadly. In some ways, it's one of the safest in terms of how volatile it is. And it's expected sort of to continue its high correlation with risk on assets, which is most often seen in the NASDAQ, but, it's sort of all correlating around this event. So the U.S. central bank's policy decisions have been one of the most important drivers of the market. Now, that being said, analysts and traders aren't expecting market-shaking moves in crypto tomorrow. The main reason being that the market has sort of known about this rate hike for the past month. So if expectations are maintained.
So far, it's exactly what we expected. So we have not seen any negative price action. But again, we're going to wait till 2:30 to really see what happens. But what he's saying is here, it's probably already baked in at least the 50 basis points, right?
There won't be such a dramatic drop. That being said, talk of, a taper tantrum or maybe more dialogue around what a potential balance sheet runoff could mean could send risk assets, Bitcoin especially, down below its previous lows. So Bitcoin's sitting around $37,600 per coin right now. And I think a lot of the anticipation.
Wow, I didn't know it got down that low yesterday. We're back up over 39,000. So this was recorded yesterday. They were at 37.6. Right now we're above 39K.
Is that, like all other risk assets, it'll continue to sort of lose or subside, deteriorate in value. But I think there is strong resistance around the $30,000 mark.
David, while we have you, we also want to get your take on the story that was in the journal.
There's been a lot more conversations about Bitcoin going all the way down to 30K and then bouncing off of it too. So there he was saying that $30,000 number again.
This morning, it certainly is getting a lot of buzz. They're talking about the NFT market. They said that it was flatlining. The first line in the article says the NFT market is collapsing. What's your take on this?
Well, yeah, I mean, it's pretty confusing. I mean, I think that first the story is completely correct in its assessment of the market, but I think one thing to remember is that the NFT market varies a lot in terms of what kind of assets you're talking about. So, just some things I've seen is gaming NFT assets and art NFT assets are not doing so hot. But social NFTs, particularly standout projects like Moonbirds and the Bored Ape Yacht Club, have seen a lot of volume traded lately. And it's actually interesting. Bored Ape Yacht Club had sort of a record sale for virtual real estate over the weekend, and that ended up leading to OpenSea, the largest NFT marketplace's platform, largest daily trading. The market.
Yeah, it was a shit show with the other side. That was crazy. People were paying 5 to 6 Ethereum in gas. Okay, so people had to get KYC. They had to put up about 306 ApeCoin, which was equivalent to like $6,500. Okay, give or take. So this was just to get a slice, okay, of land in the other side metaverse. So then on top of the $6,500 in ApeCoin that it took, it was taking another 15 to 20 grand in gas to get in there. People were pissed off because they just didn't have those funds available. I mean, they probably did a lot just to get to the place of getting enough ApeCoin, and the gas was a very big issue. But that was it was a shit show. But nonetheless, ApeCoin is actually moving up right now. It's up about 11%. And it is still the highest play in the metaverse space right now by market cap. And man, I was waiting for it to go down to like $11, $12. We'll see where it's at here in a sec. But let's listen to the rest of this.
Marketplace has ever seen. So I think the key thing to look at is sort of whether or not
was it 5 to 6K? He's saying 5 to 6K, not 5 to 6 ETH. Are you sure? I heard upwards to 5 to 6 ETH. I don't know. Somebody who was actually trying to purchase one told me 5 to maybe I misunderstood that. Could be 5 to 6K. Even if it was that, it was double Yeah, I think you're right. I think it was that. So it was double. It was basically paying the 6,500 twice, which was insane. I think you're right. I think it was 5 to 6K, not ETH.
And from what we've seen, they've not been, especially compared to last year. So that's sort of the main thing to look at. But when you say something like, the whole market is going down, it's not necessarily the case. There are standout projects that are still moving ahead and in some ways making it look in terms of volume like the market altogether is moving up. So it just goes to show it's still a pretty small market that's, it's mainly run by returning buyers at this point.
Yeah, that's kind of pretty much the entire crypto space right now. A lot of the same money floating in and out right now. We're waiting for a lot of new people to come into the space. All right, so the SPY is up slightly here, the S&P. Let's see what else we've got cooking here in crypto. Are we still above 39? We've dialed back a little bit. We're back under 39, 38.9 Ethereum, right back at that 28.50 mark right now. So, Chris says, I was part of the gas war. It cost me 2.5 ETH, around 6K for 22 plots of land on the other side. Gotcha, man. So you actually got in, Chris. Congrats, bro. I was talking to a couple different people. One of them was Oscar, the YouTuber Oscar Ramos, and man, it was crazy. I actually had sent him some ApeCoin to try to get some land because I had enough ApeCoin. I think he was trying to get like 4 plots or something like that. And he asked me if I wanted a plot. And I said, yeah, man, let's try it. And I sent him over that and a little bit of gas to try it. And he was telling me kind of what happened. It was pretty crazy, huh? Yeah, Elon's tweet. It certainly is a factor with ApeCoin for sure. Where's Ape? Let's see. ApeCoin's right here. Yeah, it's up about, it's up 2% in the last hour, 8.6%. It's still hovering at that 1581 mark, which is interesting. But there was the big pop. Look at that. Got all the way up to 1746. That early this morning, yeah. There's the 7-day. We're still trending down a little bit. We'll see if it just is it done sliding. That's the question here with ApeCoin. So we'll see. But yeah, we are waiting. The 2:30 meeting right here. There's over 12,000 people waiting to hear it as well. We have it queued up, ready to go. We're about 14 minutes away from that. They are talking about some things related to the feds, raising it up by 0.5%. So let's listen in here to the live stream by Yahoo Finance ahead of the big presser.
What economists think about is the difference between interest rate and inflation. And right now, that difference is very, very negative. Think about it, like a positive 8% inflation rate. And now the Fed's just starting to raise interest rates up to positive 1. That's a huge gap. Where we think the neutral level of monetary policy is when they raise the interest rate up to be roughly consistent with inflation. So in that perspective, the Fed has a long way to go. So probably 50s, maybe some 75s. We could see a 1% rate hike this year. If inflation keeps running at 8 or 9%,
wow,
or even heading up toward 10, I think the bond markets are going to realize the Fed has a long way to go.
Well, so Andrew, going off of that, because we've heard some criticism directed at the Fed. Jamie Dimon, CEO of JP Morgan, was the latest one, or one of the latest people to really say that the Fed should have simply raised rates sooner. In your view, do you think the Fed is behind the curve?
Yes, they're behind the curve, but there's no point in criticizing the past at this stage. Okay, the question is how to move forward. And I think I was personally disappointed today that the changes in the actual statement that they issued at 2 o'clock weren't very clear. Okay, what we need to hear from Chair Powell in a few minutes is a strategy. Now, he could say clearly that their strategy is to bring the level of interest rates up to be roughly in line with the level of inflation. Okay, and if we're lucky, inflation could come down from 8% to 5% by the end of this year, maybe even below 5%, but that would probably be good luck. All the factors the Fed itself said today that the supply chain disruptions are probably getting worse. Said today that we know about Russia and Ukraine, that's probably making things worse in terms of commodity prices and energy. Okay, we know that workers are trying to catch up with cost of living increases. We know that rent prices are skyrocketing. All these things are putting upward pressure on inflation. So the Fed needs a strategy. The strategy should start with saying we're going to move to neutral, and neutral means an interest rate that's roughly similar to the level of inflation, and they're going to move as quickly as they need to get to neutral roughly by the end of this year or early next year.
You threw out the word luck, and the word luck is often tossed about in order to avoid a recession. And Janet Yellen today said the Fed will need to be skillful and also lucky, but I believe it's a combination that is possible. That's not exactly Reagan-esque optimism about our economy. What do you make of that statement, and do you think we can avoid a recession?
I don't think there's any need for the Federal Reserve to create a recession, or even to create a risk of a recession at this point. Okay, of course a recession could happen due to some other terrible factors. Okay, but moving to neutral is not a contractionary stance. It's not a restrictive stance of monetary policy. That's a stance that would just help stabilize inflation, keep it from going up any further. Okay, so right now monetary policy is still adding fuel to the inflationary inferno. It's still adding fuel. Okay, the point about bringing the interest rate up to be roughly consistent with inflation is that's the point at which they're no longer adding fuel to make the inferno worse. Then they're going to have to figure out how do they start bringing inflation back down, but that could be a more gradual process. The recession could happen if the Fed is lurching, if people are confused what the Fed's plans are, if workers are discussing with their employer about wage increases and no one really has an idea what the Fed's planning to do about all this, that could exacerbate the risk of recession. And on the other hand, if the Fed is really clear about its plans and its strategy, that will help reassure people, and we can avoid a recession.
Well, hopefully, Mr. Powell follows your advice. Thank you, Andrew Levin, former Federal Reserve Board's.
All right, so we're about 10 minutes away from listening in to what the Fed Chairman Powell will say here, and hopefully add some meat around the bones here of the 50-point basis point hike, and we'll see what happens and really what the long-term outlook. We heard, the former federal chair talk about, we need some clarity on where the future. Where we're going here in the future, right? What is going to happen the rest of the year? And if we don't get that, and there's still a lot of uncertainty, the markets could respond as we would think they would, right? Very volatile, So we'll see. Is it time to buy gold, Paul? It's interesting. Gold has not outpaced Bitcoin in a long time, but I believe at last check this year it has been because Bitcoin's down 21% or something on the year, or 22%, 20% maybe, something like that. What's going on, guys? What's going on? What is happening? Everybody checking in. Make sure you guys hit that like button. We're getting ready for the big announcement. Almost 500 people here watching this stream, at least on YouTube. I'm not quite sure how many people we have over on Twitch, but we are streaming live on Twitch now. Every morning, Monday through Friday, 9 a.m. Eastern, we are live on YouTube and Twitch. And here, when we have big news like this, we always stream these type of events as well. Hit the like button, guys. What's up, Cajun? Appreciate that, man. Appreciate that. CSMM staking starts today. Rewards are gold. It seems that time is bad. People will take shelter in gold. That is a good point. It is a good store of value. That's for sure, Catalan. At this point, we need to adapt BTC as legal currency to counter inflation. That would be an interesting dynamic. I don't know if we're really close to that, Dylan, but it's a good point. Thanks for always being on top of it. Fressa, yeah, no problem. I'm just trying to bring everybody up to speed and keeping us updated. Let's listen in a little bit here, and let's see what's going on. What are they talking about here?
50 basis points, that's not going to be enough. They might have to hike further here, make bigger hikes, I guess, up to 75 basis points. What else do you think the Fed needs to do in order to get the economy back on track?
Again, it's going to be very difficult. So the 50 basis point move today, potentially another 2 or 3 of that size going forward. And then, of course, rate hikes at every single meeting for the next couple of months going into next year as well. Is that going to be enough? They've got a very, very difficult job ahead of them. And from my perspective, the only remedy to such high inflation is unfortunately going to be recession.
If the Fed chair indicates a looming 75-point hike, how would the markets react?
The market is not going to react well to that. The equity market, I think, would be very concerned about the fact.
So we know the 50 basis points is happening today, but what if they gave, or they alluded to a bigger hike, right, of 75 basis points later than the next meeting? That's kind of what they're talking about here.
That Powell is moving in that direction. But then at the same time, the better thing is for the Fed to try and over-deliver now so that we don't get the risk of inflation really persisting and then having to slam on
Right.
the brakes and push rates even higher. But certainly the near-term market reaction would clearly be a negative one.
And obviously we've seen Powell and the Fed really focusing on what we're seeing with employment and really getting inflation down with less of an eye on the equity market. So what then actually poses a bigger risk then, being too aggressive or not aggressive enough?
Well, I think we're talking about the long game here. If they're not aggressive enough, then they run the risk of permitting inflation to keep festering. We'd be looking at, at the moment, we're expecting inflation to come down to only around 5% by the end of this year. And that's keeping in mind that we are expecting back-to-back hikes through this year. If they don't deliver, then you expect inflation to actually settle at a considerably higher level than 5%. And at that point, then come 2023, then you're...
That 5% number was talked about last time we did this live stream during the last rate hike, right? That's where that 5% number came from. So that did come right from Jay Powell.
We're looking at even more aggressive tightening. So actually, it's better for the Fed to get on with it now, to slam on the brakes today, but they don't need to do even more next year.
So when you take a look at the market reaction today, we haven't really been seeing big swings. The Dow, S&P, both holding on to gains, I guess slightly lower than where we were at the start of the hour. When we started up at the top at 2 o'clock, we had the S&P and Dow both up just around 0.5%. The NASDAQ, though, is now negative. The big question is how much of this has already been priced in? Did nothing here today surprise the market?
No, I think this was absolutely priced in. There was a 100% chance from the market perspective
that
there would be a 50 basis point hike. A 75 basis point move would have shocked, and a 25 basis point definitely would have shocked.
Right.
So I don't think there's anything here. It's really about watching the press conference, and I think that's where you could see some equity market reaction, depending on what Powell's comments are.
Right.
All right,
What
always great to have you. Chief strategist.
What the theme is going to be, that's really going to be the thing. What is the predominant theme that we pull out of there?
We have RJ Gallo, a Federated Hermes, a senior portfolio manager, and Sarah.
We're about 5 minutes away.
Senior economist, as we wait for Fed Chair Jay Powell to begin his remarks. Sarah, first to you,
I love how everybody says Jay Powell now. Love it.
So I want to know more about their tolerance for growth, slowdown, or potential recession and inflation. So do they need to get back to 2%, no matter whatever it takes? Or if we see the economy slipping into recession, at that point, are they maybe willing to ease up on the pace of tightening and perhaps let inflation run somewhat over 2%? And if so, roughly what rate, if that means mitigating the outright contraction in the economy? So just trying to get a better sense of that trade-off between inflation and growth, given just how tricky of a situation the Fed finds itself in.
Just in case our Brian Chung is taking notes, RJ, what would you like to ask the Fed chair?
I'd be focused on the balance sheet plan myself. In particular, a number of years
Somebody
ago,
got to get this guy a mic.
I worked at the Federal Reserve.
Come on, RJ.
The system of market account was less than $1 trillion.
What is that, man?
Treasuries. The world has changed massively since then, and there has been some talk that some in the committee would like to get back to an all Treasury portfolio. I think some greater clarity on that is going to be required.
Well, you got to get my guy RJ a mic.
And I would like to understand what the chair thinks about the composition of the portfolio. If they do want to go back to an all Treasury portfolio, that's a profound development for the mortgage market. They haven't unveiled that yet, and I think we need to keep putting pressure on them to offer as much insight as they can going forward on that issue.
So Sarah, do we have an idea of where we are in terms of the economic recovery narrative based on the most recent data, as well as the moves that the Fed is making?
So in terms of the recovery, obviously we've seen output has more than recovered. The labor market, we haven't seen jobs recover, but essentially in terms of overall tightness, we're back to where we were. So I think
sounds about right, Sean.
We've seen this recovery surprise time and time again, and I think overall we're looking at such a strong economic backdrop that's why we do have the Fed embarking on this fastest tightening cycle we've seen since the mid-1990s.
RJ, right now we do have a hawkish Fed, but there is this risk, though, that inflation could potentially be stickier than what maybe we initially are thinking it could be at this point. How are you positioned, or how should investors be positioned right now?
Well, on the fixed income side, across our actively managed portfolios, and we are an active manager, we don't run passive strategies currently at Federated Hermes. We've been materially short duration for quite some time. Go back, a year, 9 months ago, transitory was a pretty hot word. It proved to be a false word. Inflation proved to not be transitory. In fact, to be quite persistent and quite a bit higher than many anticipated. We felt that the inflation problem was going to be more problematic than the market. So being short duration has worked. We think most of the pain in the terms of the rapid bond market sell-off that has characterized the last 5 months or so, most of the pain is probably behind us. At this point, the market is expecting a terminal Fed funds rate around 3.4%, give or take. We think that's a reasonable expectation. It wasn't that long ago. That number was still in the twos. So the bond market has incorporated a lot more tightening than the Fed has already done. And that's because these days, the Federal Open Market Committee, it's almost sort of like the Federal Open Mouth Committee. They communicate through projections, through speeches, through very detailed.
All right, this guy's kind of just going on, and that microphone is terrible, but we're essentially where we were before we got the news that it was 50 basis points, which is what we expected, but nothing has changed. We were at this exact $1.85 trillion market cap. We were at this exact 1.5% change in the last 24 hours to the upside. We're exactly where we were before the news broke. So nothing has changed at this point. Absolutely nothing. Now the page turns to 2:30 p.m. Eastern, which it is right now. And here we go. We are waiting for Jay Powell. Let's listen in. Okay, we just have a feed right now, but we are waiting Jay Powell to walk up here. Guys, hit that like button if you haven't already. We're going to listen in here and see. And now we know the 50 basis points are there. What happens now? It looks like here he comes. So here we go.
Good afternoon. It's nice to see everyone in person for the first time in a couple of years. Before I go into the details of today's meeting, I'd like to take this opportunity to speak directly to the American people. Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by 0.5 percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate. In addition, we are beginning the process of significantly reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a 0.5 percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in forming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels, assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy. And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet up to monthly cap amounts. For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time.
We
are highly attentive
trying to fit this in. Hold on.
The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well positioned to handle tighter monetary policy.
Similar tone than the last time he talked. Very similar.
Our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, here we go. Very similar tone.
Nick Chamaros of the Wall Street Journal.
Nothing different, really.
Chair Powell, the unemployment rate at 3.6% in March is now essentially at the level that the committee had expected would prevail over the next 3 years. and at the bottom end of FOMC participants' projections for the longer run rate that you submitted in the projections at the last meeting. How has your outlook for further declines in the unemployment rate changed since March? What does this imply for your inflation forecast? And how has your level of confidence changed with regard to the feasibility of slowing hiring without pushing the economy into recession? Thanks.
Thank you. So you're right. 3.6% unemployment is just about as low as it's been in 50 years. And I would say that I expect, and committee members generally expect, that we'll get some additional participation. So people will be coming back into the labor force. We've seen that, particularly among prime age people. And that will, of course, tend to hold the unemployment rate up a little bit. I would also expect, though, that job creation will slow. Job creation has been at more than 500,000 per month in recent months, very, very strong, particularly for this stage of the economy. And so we think with
I don't know, Faye.
fiscal policy
That's
less
hilarious.
supportive, with monetary policy less supportive, we think that job creation will slow as well. So it is certainly possible that the unemployment would go down further. So I would expect those to be relatively limited because of the additional supply and also just the slowing in job creation. Implications for inflation, really the wages matter a fair amount for companies, particularly in the service sector. Wages are running high, the highest they've run in quite some time. And they are one good example of, or good illustration really, of how tight the labor market really is. The fact that wages are running at the highest level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing in the labor market, higher rates, for example, of vacancy filling and things like that, and more people coming back in, we like to think that supply and demand will come back into balance and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation. Your third question was?
Your level of confidence that you can slow hiring without pushing the economy into a downturn.
So I guess I would say it this way. There's a path. There's a path by which we would be able to have demand moderate in the labor market and therefore have vacancies come down without unemployment going up, because vacancies are at such an extraordinarily high level. They're 1.9 vacancies for every unemployed person, 11.5 million vacancies, 6 million unemployed people. So, and we haven't been in that place on the vacancy, sort of the vacancy unemployed curve, the Beveridge curve. We haven't been at that sort of level of a ratio in the modern era. So in principle, it seems as though by moderating demand, we could see vacancies come down, and as a result, and they could come down fairly significantly, and I think put supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. So there's a path to that. Now, I would say I think we have a good chance to have a soft or softish landing or outcome, if you will. And I'll give you a couple of reasons for that. One is households and businesses are in very strong financial shape. You're looking at excess savings on balance sheets, excess in the sense that they're substantially larger than the prior trend. Businesses are in good financial shape. The labor market is, as I mentioned, very, very strong. And so it doesn't seem to be anywhere close to a downturn. Therefore, the economy is strong and is well positioned to handle tighter monetary policy. So, but I'll say, I do expect that this will be very challenging. It's not going to be easy. And it may well depend, of course, on events that are not under our control. But our job is to use our tools to try to achieve that outcome. And that's what we're going to do.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration. Why 1 month one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
Sure. So 75 basis point increase is not something the committee is actively considering.
Okay, that's good.
What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations.
That's good.
There's a broad sense on the committee that additional 50 basis increases should be on.
So that's the plan. Keep it 50
table for the next couple of meetings. So
okay,
we're going to make those decisions.
That's some clarity.
Meetings, of course.
That's good.
And we'll be paying close attention to the incoming data and the evolving outlook, as well as to financial conditions. And finally, of course, we will be communicating to the public about what our expectations will be as they evolve. So the test is really just, as I laid it out, economic and financial conditions evolving.
At least we have some clarity. That's good.
And, I think expectations are that we'll start to see inflation, flattening out.
Hey, this is cool. Luke's on
the
Twitch stream. What's up, Luke?
Some evidence that the core PCE inflation
What's up, bro?
is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We'll want to really feel like we're making some progress there. But I mean, we're going to make these decisions, and there'll be a lot more information. I just think we want to see that.
That's the best.
As we get there. It's a very difficult environment to try.
Best
to
thing we've heard.
Guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So, we're leaving ourselves room to look at the data and make a decision as we get there.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the funds rate? Or
I don't think 1 month is not, no. 1 month's reading doesn't tell us much. We'd want to see evidence that inflation is moving in a direction that gives us more comfort. As I said, we've got 2 months now where core inflation is a little lower, but we're not looking at that as a reason to take some comfort. I think we need to really see that our expectation is being fulfilled, that inflation, in fact, is under control and starting to come down. But again, it's not like we would stop. We would just go back to 25 basis point increases. It'll be a judgment call when these meetings arrive. But our expectation is, if we see what we expect to see, then we would have 50 basis point increases on the table at the next 2 meetings.
Okay. So expect 50 basis points the next 2 meetings.
Thank you. Colby Smith from the Financial Times. Given the expectation that inflation will remain well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
So neutral. When we talk about the neutral rate, we're really talking about the rate that neither pushes economic activity higher nor slows it down. So it's a concept, really. It's not something we can identify with any precision. So we estimate it within broad bands of uncertainty. And the current estimates on the committee are sort of 2 to 3%.
Cats are hilarious.
So that's a longer run estimate. That's an estimate for an economy that's at full employment and 2% inflation. So really what we're doing is we're raising rates expeditiously to what we see as the broad range of plausible levels of neutral. But we know that there's not a bright line drawn on the road that tells us when we get there. So we're going to be looking at financial conditions, right? Our policy affects financial conditions, and financial conditions affect the economy. So we're going to be looking at the effect of our policy moves on financial conditions. Are they tightening appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. But again, there's a sort of false precision in the discussion that we as policymakers don't really feel. It's you're going to raise rates, and you're going to be kind of inquiring how that is affecting the economy through financial conditions. And of course, if higher rates are required, then we won't hesitate to deliver them.
Thanks, Chair Powell. Neil Irwin with Axios. Do you see evidence that inflationary psychology is changing, that
in areas like workers' wage demands, businesses' willingness to raise prices. Do you see evidence that there is a psychological shift going on inflation?
I know, right? Luke?
We don't really see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated. And you can look at that and say, well, that's because people expect inflation to come down. And in fact, inflation expectations come down fairly sharply. Longer-term inflation expectations have been reasonably stable, but have moved up but only to levels where they were in 2014 by some measures. So you can look at that, and I think that's a fair description of the picture. But it's really about the risks. We don't see a wage price spiral. We see that companies have the ability to raise prices, and they're doing that, but there have been price shocks. So I just think it takes you back to the basic point was that we know we need to expeditiously move our policy rate up to ranges of more normal, neutral levels, and we need to look around and keep going if we don't see that financial conditions have tightened adequately or that the economy is behaving in ways that suggest that we're not where we need to be. So you don't see those things yet, but I would say there's no basis for feeling comfortable about that. It's a risk that we simply can't run that risk. We can't allow a wage price spiral to happen, and we can't allow inflation expectations to become unanchored. It's just something that we can't allow to happen, and so we'll look at it that way.
Gina. Great. Thanks, Chair Powell. Gina Smilik with the New York Times. You mentioned in the statement both the upside risks to inflation from Russia and China. Obviously, those are very much supply shocks rather than demand side. And I wonder
that's dope.
Meant to convey by
What's up, Faye?
them. I wonder what you meant to convey by adding those.
Well, so our tools don't really work on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices or food prices and things like that. So we can't affect those, but there's a job to do on demand, and that you can see that in the labor market where demand is substantially in excess of supply of workers, and you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things for both the situation in Ukraine and the situation in China. They're likely to both add to headline inflation, and people are going to be suffering from that. People almost suffer more from food and energy shocks but even though they don't actually tell us much about the future path. But the second thing is that they're both capable of preventing further progress in supply chains healing. And so, or even making supply chains temporarily worse. So that they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So they're two further negative shocks that have hit really in the last 60 days, 90 days.
Victoria.
Can I ask a question?
Hi, Victoria Guida from Politico. I want to follow up on that because you all have obviously highlighted that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved, since you can only handle the demand side, as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job we need to do on demand, and there's plenty to be done there. Again, if you look at it, it's essentially almost 2-to-1 vacant job vacancies to unemployed people. There's a lot of excess demand. There are more than 5 million more employed plus job openings than there are the size of the labor force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks. That's one of the reasons we would tend to focus on that, because we can have more of an effect on that. But
that's
some
old water
situation. We have to be sure that inflation expectations remain anchored. And I mean, that's part of our job too. So we'd be watching that carefully, and it puts any central bank in a very difficult situation.
Howard Stein with Reuters, and thanks, and nice to be back. So two questions, one quick one. You cited the 1.9 to 1 figure so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects through stock market channels? Equity markets broadly down quite a bit since late fall, first of the year. How are you mapping that into household consumption? Have they come down enough? Do you need another leg down in equity values to think that households are going to stop spending at the rate you need them to stop spending?
Okay, so in terms of the vacancies to unemployment ratio, we don't have a goal in mind. There's no specific number that we're saying we got to get to that. It's really, you've got to get to a place where the labor market appears to be more in balance. And that depends not only on the level of those things, it depends on how well the matching function in the labor markets are working. Because the longer these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to help. So there isn't a specific number. I will say we were at, I think when we got to 1 to 1 in the late teens, we thought that was a pretty good number. But again, we're not shooting for any particular number. What we'd like to see is progress, but we're not really looking at that. That's an intermediate variable. We're looking at wages, and we're looking at ultimately inflation. So that, there are a bunch of channels through which policy works. You can think of it as, interest-sensitive spending. And then you can think of another big one as asset values broadly. And, there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the housing market, or we focus on financial conditions broadly. So we wouldn't be targeting any one market, as you suggest, for going up or down, or taking a view on whether it's at a good level or a bad level. We just would be looking at very broad measures of financial conditions, all the different financial conditions indexes, for example, which include equity, but they also include debt and many other things, credit spreads, things like that too.
Rachel.
Hi, Chair Powell. Rachel Siegel here from the Washington Post. To follow up from your message from the very beginning, what is your message to the American people about when they will start to feel the effects of, say, the 50 basis point rate hikes or multiple hikes? How do you explain to them what that does to their grocery bill or their rent or their gas bill? Thank you.
So the first thing to say is that we understand, and some of us are old enough to have lived through high inflation, and many aren't, but it's very unpleasant. It's just something people don't, when they experience it for the first time. You're paying more for the same thing. If you're a normal economic person, then you're probably don't have that much extra, to spend, and it's immediately hitting your spending on groceries, on gasoline, on energy and things like that. So we understand the pain involved. So how do you get out of that? And it's our job to make sure that inflation of that unpleasant high nature doesn't get entrenched in the economy. That's what we're here for. One of the main things we're here for, perhaps the most fundamental thing we're here for. And the way we do that is we try to get supply and demand back in sync with each other, back in balance, so that the economy is under less stress and inflation will go down. Now, the process of getting there involves higher rates. So higher mortgage rates, higher borrowing rates, and things like that. So it's not going to be pleasant either, but in the end, everyone is better off. Everyone, particularly people on fixed incomes and at the lower part of the income distribution, are better off with stable prices. And so we need to do everything we can to restore stable prices. We'll do it as quickly and effectively as we can. We think we have a good chance to do it without significant increase in unemployment or really sharp slowdown. But ultimately, we think about the medium and longer term, and everyone will be better off if we can get this job done. The sooner, the better.
Thank
Thank you, Chair Powell. Edward Lawrence with the Fox Business Network. So you've talked in the past about consumer spending and how that's drives the economy. Are you concerned with this high level of inflation that the consumer will stop spending, pushing us into, and what's the level of your concern, pushing us into a recession?
So the economy is doing fairly well. We expect growth to be solid this year, and we see household spending and business investment as fairly strong, even in the first quarter, which was relatively slow on some other fronts. So, and the labor market, you look at the labor market for people who are out of work and looking, there are lots of job opportunities. For wages are moving up at rates that haven't been seen in quite a long time. So it's a good time to be a worker looking to either change jobs or get a wage increase in your current job. So it's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession. Now, of course,
that's good.
Events around the world and fading fiscal policy.
No signs of recession.
Rates,
that's big.
You could see some slower economic activity. Certainly, it will not be. Last year was an extraordinary.
No signs of recession. 50 basis points expected in the next two meetings. That's why crypto's pumping.
But
so far,
investors have growth this year at a solid pace, above 2%.
But we've talked with economists who
having some clarity,
Democrats and Republican presidents, who both said that that the Fed is so far behind the curve on inflation that a recession is inevitable.
You got to pump it up.
And as I said, I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially higher unemployment. And I mentioned the reasons for that. So I see a strong economy now. I see a very strong labor market, for example. Businesses can't find the people to hire. They can't find them. So typically in a recession, you would have unemployment.
That is true.
Surplus demand. So
True.
There should be room, in principle, to reduce that surplus demand without putting people out of work. The issue will come that we don't have precision surgical tools. We have essentially interest rates, the balance sheet, and forward guidance, and they're famously blunt tools. They're not capable of surgical precision. So I would agree. No one thinks this will be easy. No one thinks it's straightforward, but there's certainly a plausible path to this, and I do think we've got a good chance.
You got to pump it up.
Our job is not to rate the chances; it is to try to achieve it. So that's what we're doing. There are a range of opinions, though, and that's only appropriate.
Don't you know, pump it up.
Thanks, Steve Dorsey, CBS. You mentioned earlier just now fading fiscal policy. Do you feel that the Fed has been
Steve Dorsey
from policies at the White House and in Congress in combating inflation?
It's really the Fed that has responsibility for price stability, and we take whatever arrives at the Fed in terms of fiscal activity. We take it as a given, and we don't evaluate it. We don't. It's not our job, really. We don't have an oversight function there, and we look at it as our job to given all the factors that are happening, to try to sustain maximum employment and price stability. So, if the Congress or the administration has ways to help with inflation, I would encourage that, but I'm not going to get into making recommendations or anything like that. It's really not our role. We need to stay in our lane and do our job. When we get inflation back under control, then maybe I can, give other people advice. Right now, we need to focus on doing our job.
That was a real answer. That was a real response.
Stick in our lane.
I like that. That was real.
Steve Matthews with Bloomberg News. A number of your colleagues have said that rates will need to go above neutral into a restrictive territory.
Steve Matthews.
Inflation. One, do you agree with that? And two, you recently spoke in great praise of Paul Volcker, who had the courage to bring inflation down with recessions in the 1980s. And while it's certainly not your desire, the soft landing is the big hope of everyone. Would this FOMC have the courage to endure a recession to bring inflation down if that were the only way necessary?
So I think it's certainly possible that we'll need to move policy to levels that we see as restrictive as opposed to just neutral.
I seen that, Luke.
Today.
Why did his name say Robert?
Today.
I seen that, bro.
We need to do that, then we won't hesitate to do it. I'll say again, there's no bright line, that you're stepping over. You're really looking at what our policy stance is and what the market is forecasting for it. You're looking at financial conditions and how that's affecting the economy and making a judgment. We won't be arguing about whose model of the neutral rate is.
Let's go, baby.
It's much more about a practical application of our policy tools. And we're absolutely prepared to do that. It wouldn't hesitate if that's what is taken. So I am, of course, who isn't an admirer of Paul Volcker? I shouldn't be singled out in this respect, but I knew him just a little bit and have tremendous admiration for him. But I would phrase it this way. He had the courage to do what he thought was the right thing. That's what it was. It wasn't a particular thing. It was that he always did what he thought was the right thing. If you read his last autobiography, that really comes through. So that's the test.
It's just the weak look, guys.
Will we do one particular thing? I would say we see restoring price stability as absolutely essential for the country in coming years. Without price stability, the economy doesn't work for anybody, really. And so it's really essential, particularly for the labor market. If you think about it, if you look at the last cycle, we had a very, very longest expansion cycle in our recorded history. And in the last 2-3 years,
Cardano, bro, let's go.
Going to people in the lower quartiles. And
Cardano, let's go.
Racial wealth and income, not wealth, but income gaps were
86 cents, guys.
Down, wage gaps. So it's a really great thing. We'd all love to get back to that place, but to get back to anything like that place, you need price stability. So we've been hit by historically large inflationary shocks since the pandemic. This isn't anything like regular business. This is, we have a pandemic. We have the highest unemployment, since the Depression. Then we have this outsized response from fiscal policy and monetary policy. Then we have inflation. Then we have a war in Ukraine, which is cutting the commodity.
BEERRUN, beer run.
And now we have these shutdowns in China. So it's been a series of inflationary shocks that are really different from anything people have seen in 40 years. So we have to look through that and look at the economy that's coming out the other side. And we need to somehow find price stability out of this. And it's
go, baby.
It's going to be very challenging, I think, because you do have
Zilliqa moving
shocks,
big,
which are famously difficult to deal with.
V-chain.
So I guess that's how I think about it.
Cardano's the big mover right now, though. That's big.
Thank you, Chris Rugaber. And
let's go, baby.
Earlier, you just said that if necessary, I think were the words that you would, or if
let's go, baby. Let's hit 40. Come on, baby.
It's possible that we'll need to move policy.
That's a big jump, guys.
Where inflation is and the hot economy is, or certainly the hot labor market as you described it.
Let's go, baby.
The hesitation. I mean, shouldn't it be? What else do you need to see in order to determine that? Wouldn't the Fed naturally be looking to go to a restrictive level at this point? Thank you.
So if I said necessary, I meant to say appropriate. We're not going to be erecting a high barrier for this. It's more if we think it's appropriate. The point is we're a very long way from neutral now. We're moving there expeditiously and we'll continue to do so. And we can't make that decision really today. The decision about how high to go will be on the table to be made when we reach neutral.
That would be so
I
epic.
expect we'll get there.
They had pump it up
expeditiously.
and Jerome was just like this.
It's not that we're not.
You got to pump it.
We don't want to making that decision today wouldn't really mean anything. But I'll say again,
Foxy.
If we do believe that it's appropriate to go to those levels, we won't hesitate.
Is my mic too loud? Really? I've never changed the setting. Maybe it's just too soft. J-Pow's too quiet.
Bloomberg Television and Radio. The balance sheet. Why did you decide to wait until June 1st to begin letting securities roll off and not immediately start in the middle of this month, say?
Michael
And
McKee.
do you have a newer or a better estimate for the monetary policy impact of letting the balance sheet decline? And then finally, I'm just curious.
Looking
why
good,
you felt
Baldy.
the need
What up,
to
Frank?
Address the American people at the top
Let's go,
of
baby.
your remarks. Are you concerned about
Got somebody on
credibility with the American
Twitch.
people?
So why June 1? It was just pick a date, and that happened to be the date that we picked. It was nothing magic about it. It's not going to have any macroeconomic significance over time. We just picked
Silica, man.
Sometimes we publish these
fire.
calendars on the first day of the month.
Fire.
That's what we're doing. I wouldn't read anything into it. In terms of the effect, I would just stress how uncertain the effect is of shrinking the balance sheet. We run these models, and everyone does in this field, and make estimates of what will be how do you measure, a certain quantum of balance sheet shrinkage compared to quantitative easing. And, these are very uncertain.
My mic's too hot.
I really can't be any clearer. There won't be any clearer. People estimate
See if I can fix that.
That broadly on the path we're on, and this will be taken probably too seriously, but sort of 1/4%, one rate increase over the course of a year at this pace. But I would just say with very wide uncertainty bands, very wide. We don't really know. There are other estimates that are much smaller than that, by the way, and some of you may have read about that. That's kind of a mainstream estimate. We know that.
All right, I'm turning down my input here.
What
do you guys think now?
Of returning.
How about now?
To more normal,
we good?
More neutral financial.
Does that sound better?
And
our
mic
is fine, bro. Okay.
Is to set up a plan and have it operate.
Just turn down input.
And really have have the interest rate be
see
the
what y'all
active
say
tool of
about
monetary
that.
Policy. In terms of speaking to the American people, I feel like sometimes.
What's up, Brian?
I want to remind us really that that's who we work for, and that it's inflation that people are feeling all over the country, and it's very important that they know that we know how painful it is.
Oh,
and
Tara is
that
going to
we are
flip
working
Solana,
hard
huh?
On fixing it.
Look at
I
that.
thought it was quite important to do that, and so that was really the thinking behind that.
Do you think the Fed has a credibility problem?
No, I don't. And a good example of why would be that.
Nice pump.
So in the fourth quarter of last year, as we started talking about tapering sooner and then raising rates this year, you saw financial markets reacting, very appropriately. Not to bless any particular day's measure, but the way financial markets, the forward rate curve has tightened in response to our guidance and our actions, really amplifies our policy. I mean, it's monetary policy is working through expectations now to a very large extent. We've only done 2 rate increases.
Let's go, baby.
If you look at financial conditions, the 2-year is at 280 now in September. I think it's at 20 basis points. And that's all through the economy. People are feeling those higher rates already. And that shows that the markets think that our forward guidance is credible. And I think that's we want to keep it that way.
Scott Forsley, can you have your hand up? Okay. Brian, Chung.
Hi there, Brian Chung with Yahoo Finance. To expand on Steve's question about Paul Volcker, there was also a great pain that came with that as well. Higher interest rates obviously affecting households and businesses. I'm wondering how you kind of square what might be demand destruction. Are you already seeing that? Is the idea here to incentivize a lack of spending, to decrease consumption, to perhaps table business investments? Is that essentially what's happening through this hiking cycle? Thanks.
Well, so as I mentioned, you can see places where their demand is substantially in excess of supply, and what you're seeing as a result of that is prices going up and at unsustainable levels that are not consistent with 2% inflation. And so what our tools do is as we raise interest rates, demand moderates and it moves down. Interest rates, businesses will invest a little bit less, consumers will spend a little bit less. That's how it works. But ultimately, getting supply and demand back in balance is what gives us 2% inflation, which is what gives the economy a footing where people can lead successful economic lives and not worry about inflation. I mean, so yes, there may be some pain associated with getting back to that, but the big pain is in not dealing over time, is in not dealing with inflation and allowing it to become entrenched.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could take a step back and talk about, in March, the dot plot had, steady, looked like steady quarter point rate hikes, get the funds rate up to 2% at the end of the year. Now, it seems like you're much more aggressive. So could you talk about the thinking that's behind that? Thank you.
So look, I think what you've seen is really, I would say last fall, in the middle of last fall, there was a time when our policy stance was still pretty much in sync with what the data were saying. If you remember, there were a couple of weak jobs reports, and inflation had actually come, month by month, inflation had come down till September, a few months in a row, stayed low. And then around the end of October, we got three or four really strong readings that just said, no, this is a much stronger economy. And by the way, then with the restatement of the jobs numbers, it looked like the job market was much more even and stronger in the second half of the year, but that hadn't happened yet. Anyway, we got an ECI reading, Employment Compensation Index reading, the Friday before the November meeting. Then we got a really strong jobs report. Then we got a really high CPI report. And so I think it became clear to the committee that we needed to adjust and adapt. And we have ever since then, really ever since then, we've been adapting. The committee moved by the time of the December meeting to a meeting of 3 rate increases, then to a meeting of 7 rate increases at the March meeting. And that process is going on, and it's clearly continuing. And that's why I say, and I actually mentioned this at the March meeting, that no one should look at any single SEP as sort of a real resting place for 90 days, because we're in a fast evolving situation. And that's what's happened. You can see unanimous vote today, of course. And I told you the guidance that broad support on the committee to have 50 basis point hikes on the table at the next couple of meetings. So you're right. And by the way, other forecasters have been doing the same thing. And it's just us adapting to the data and to the situation and using our tools to deal with it.
Okay, so go to Nancy for the last question.
Last question.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, I want to ask how you're able to balance your dual mandate, stable prices, and maximum employment, especially when the unemployment rate
Nancy.
for Black workers is
Hello, is Nancy there?
double,
Why do I always get those?
Twice the rate for white workers.
So unemployment rates for all racial groups have come down a lot and are now much closer to where they were before the pandemic hit. So so that's one thing I would say, and that's important. But the bigger point is this: I do not at this time see the two sides of the mandate as in tension. I don't, because you can see that the labor market is out of balance. You can see that there's a labor shortage. There aren't enough people to fill these job openings, and companies can't hire, and wages are moving up at levels that would not over time be consistent with 2% inflation over time. And of course, everyone loves to see wages go up, and it's a great thing, but you want them to go up at a sustainable level, because these wages are to some extent being eaten up by inflation. So what that really means is, to get the kind of labor market we really want to get, we really want to have a labor market that serves all Americans, especially the people in the lower income part of the distribution, especially them. To do that, you've got to have price stability. And we've got to get back to price stability so that we can have a labor market where people's wages aren't being eaten up by inflation, and where we can have a long expansion too. That's the good thing, is you can have, as we've had several of the longest expansions in US history have been in the last 40 years. And that's because it's been a time of low inflation, and long expansions are good for people and good for the labor market. So that's the way I think about it. I think we, our tools work. We have to think in the medium and longer term. And I do think that the best thing for everyone is for us to get back to price stability to support really a sustained period of strong labor market conditions. Thanks very much.
All right. I believe that is it. Okay. So if you're just tuning in, everybody, welcome in. This event has now ended. There we go. All right. So that is the close. All right. So we can quickly recap this. This is really, really simple. And this is why we're getting the price pump that we see here on the candles. or excuse me, on the bubbles. So basically, why is the market moving up? Well, we got exactly what we were expected to get in terms of the 0.5% interest rate hike. Okay. Then from there, he said we can expect to see this same rate hike over the next 2 meetings. Okay. So that gave us some clarity of where we could be heading down the line, right? So giving us clarity into the future of where we are. He also said that there was some solid economic growth measures this year in 2022, that the economy was actually looking pretty solid. The labor market was looking good. Wages are moving up and jobs are plentiful. That was part of the conversation. That is a nice little catalyst. No signs of recession is what he said. That too was big for the crypto market. So really the big couple things that he said, the two big things in my opinion were no signs of recession right now, and the fact that we're going to continue on this same path of the 50 basis point hike over the next 2 meetings. What that does is it gives us clarity on 2 fronts. Clarity that where we're moving in the future in terms of rate hikes, and also the biggest threat out there being a recession is not that big of a threat, according to Jerome Powell. And he does have a lot of say-so. Like regardless of what your opinion is or what you think or what other economists think, Jay Powell's opinion is public. Jay Powell's opinion affects the markets. So the fact that he said that today is a good thing for crypto, hence why we're seeing all of the green here over the past hour or so. And we could see the overall crypto market now. Before we started the press conference, we were up 1.5%. Okay, 1.5%, and we were at a $1.85 trillion market cap. Now that we have just concluded, it is now a $1.9 trillion market cap and a 5.5% increase or change to the upside in the last 24 hours. So we went from being up 1.5% up to being up 5.5%, just like that. Just on a couple things from Jay Powell, some good news. So we are going to continue to watch this. Will this help the crypto market now take off a little bit in May, now that we have some clarity that, according to Jay Powell, there are no signs of a recession? Solid economic growth is to be expected here in 2022. In terms of the labor market, we are seeing wages moving up month over month, and jobs are increasingly available, right? The job market is there for the taking. I mean, we're not at a shortage by any stretch of the imagination. And the fact that he said we're expected to see the 50 basis points over the next 2 meetings. So that gives us some clarity. That's what we wanted to see out of this meeting. Just give us some direction. Let us know what's in store, whether it's good or bad or indifferent. Give us something. And I think we got some good insight. At least the market is reacting to it as such. I think the big ones for me, again, no signs of recession, and then knowing exactly what the expectations are for the next 2 meetings, right? Knowing exactly those expectations are to move it up the same amount of percentage points that we just saw today, right? So that is what we're seeing right now in the markets, and that's why everything is green. So what is going on, everybody? Welcome into the live stream. If you're just popping in, that is kind of the skinny right now. Let's take a look at the SPY here. Oh, look at that. The S&P is running. Oh my, look at that. That's big. Okay. NASDAQ is up. My, this is big. That's good news. Wow. Look at that. We are seeing across the board. Look at that. That is good stuff. All right, where's the Dow at? Let's see. Dow's up another 2%. Russell 2000. Let's see. Probably something similar. Yep, about 1.5%. All right, look at that. That is good stuff. That S&P, look at that, man. That is big time. S&P with a big pop. Look at that here late afternoon. Up 2.25% here late afternoon. Love it. And we are seeing the same kind of reaction here in the crypto market. Bitcoin, did we get to 40K yet? Nope, not quite. Let's see. Keeps wanting to refresh to 39.9. Where is it? 39. Yeah, we're still 39.8, 39.7, somewhere in there. Okay. Let's see what CoinGecko has us. Has us at 39.9, 39.9 right there. 5.5% up right now. Great stuff. So what do we got out here? What's up, Libre? What's happening? Glad I bought my house when I did. Nice. What's up, man? BTC about to break out to 40K. Mary, what's happening? Demario Macy, what's going on, man? Bitcoin above 40K. Boomer sooner. What's up? The global crypto market cap, 1.80 trillion, a 5.66% increase. No, it's at a 1.9 trillion. 1.9 trillion. What's up? What's up? The more they talk, the more the market moves up. Love it, Stan. Yeah, Crotama. What's up with Crotama? Clarity. ... Yes. Raul, clarity. ... Exactly. Hey, Zach, what's up, Libre? What's going on, bro? Coffee mug. Love it. Elijah, we're up. Yes, we are, bro. Can you analyze Shiba Inu? Yeah, let's see where I can give you my thoughts on it, where we're at. Of course, we're going to see a nice little price pop with the overall market coming up. We're up about 6.5% on SHIB. We were down at those 2-0 levels where I thought it was a great time to add to the position or open it up a position. It seemed like we've had that that level of support down there for a while with SHIB in those low twos. And it's gone below it a couple times, but it seems to retrace and come back above it rather quickly. So all coins are pumping. Dallas, what's up, man? I just bought in SHIB at 2162. All right, bro. I like it. Modeling off of the previous rate hike, the total market cap of areas of interest work out to 1.86 trillion, 2.02 trillion, 2.112 trillion. Okay, nice. Modeling off a previous rate hike. Nice. Okay, I like it. Thanks, Daniel. Appreciate that, man. Could we check the Volt chart? Yeah, let's take a look. Let's take a look. What do we got? Volt. Volt is volting. We are seeing some price action here. Volt is on a nice green candlestick today. Look at that. Up about 11%. That's good stuff. So Volt, super bullish on Volt. Look at that. That's a good looking chart there for Volt. Retracing nicely. Colt Dow back up a little bit. ApeCoin is up 8% on the Elon tweet today, right? Or the changing of the image, we should say. Very interesting. Yeah, we're taking a look at Ape right now. This is Ape's chart right here. We are seeing some positive price action, as you can see. So let's see. What else do we got? Also, welcome everybody who's listening in on Twitch. We are now live streaming on Twitch and YouTube. That's pretty cool. Apollo coming up a little bit. They got some big news coming out tomorrow. So they're trying to bounce a little bit. WAGMI trying to bounce. They're still at a $9 million market cap. WAGMI. You could check Bear Bucks. Revive was the new team and new dev on ERC20 info on Twitter also. Bear Bucks. Thank you so much for that donation. We'll see if we can just give them a quick look on Twitter here. Bear Bucks. See if we can find them. An easy-to-use cashless system. Is this it? Card that can be used to purchase on and off campus. Bear Bucks. Is this what it is? No, that's something else. That's something from a university or something. What's this? Bear Bucks Finance. This is probably it. Yeah, this is probably it. Bear Bucks. All right, there we go. At Bear Bucks, right? So I appreciate the super chat. Ryan, can you check out SAPE? Chart's looking good. Yeah, dude, we'll check that out real quick. Thank you so much for the donation. Seifu. Let's make sure I get their contract address. SAPE has been looking very bullish. Very bullish. Just had an AMA with those guys, with Sean, earlier this week. So let's take a look at SAPE real quick. Let's get that token address. Make sure we get the right one and pop it right in there. And let's see where SAPE is at real quick. So things are looking really good, guys. If you're just popping in, ooh, things are looking good for SAPE, aren't they? Wow. Let's see here. That is bullish. That is that's the 3-day. Let's go to the 1 day here. There we go. Yeah, there's the SAPE chart, guys. Wow, up 224% in the last week, up 24% today. So yeah, SAPE is looking very bullish. Only 873 holders too. Nice bounce there for SAPE. Do I think SHIB can or will eat another zero? It certainly can. I mean, back to all-time highs would be that 8.8 level. If we get a little bit past that, that's shedding a zero. Oh, yeah, it can happen. It can happen. Can you talk about XAMC? It's under the Griffer token. I don't know much about that one, AA. End of May, it drops lower again, but June, we moon. Nice. Streamer Inu losing a zero. Oh, it is looking solid. We were at the 9.1 level earlier this morning when we were talking to Cove. That's looking bullish. We're up to the 9.869, getting ready to lose that zero again. Streamer Inu looking good. Very nice. Ryoshi's back up 15%. Ryoshi's Vision. I like it. I want to see these green. Okay, so yeah, we've come back down off the pop, but I'm still liking this long term. I think we're going to get a nice pop when we get back into a bull market here. Ryoshi's Vision. Officially part of the SHIB ecosystem now. Let's see what else we got. Coming down slightly here on some of the bubbles here. Let's see. So we got Zill up 20%. We got Rune 19%. Vet is up 13%. ApeCoin 10%. Where's Cardano? Where did ADA go? How did I lose ADA? I was buying ADA, guys. Low. Where's it at? Ooh, Theta's up 13.6%. Did Cardano dial back? Where are we at? Oh, no, here it is. Up 13%. We're up to 87 cents. Cardano's looking bullish right now. Let's see here real quick. Let's look at Cardano. Yeah, I was buying Cardano at 79 cents. What, yesterday, basically? 2 days ago? I added a ton of Cardano underneath 80 cents. So I'm pumped about that. Up to 86. Let's go, baby. Nice pump. Yeah, I mean, look at this. In the last 24, it was 76 cents. I think I might even got it lower than that. Yeah. Hold on, let's see where we're at. No, I got even low. Man, it got even lower. I got it like right in here on Tuesday. 79, somewhere in there. It got as low as 76, even back in here. 75. Look at that. Popped up over 85 cents right now. Look at that. That's a big pop. There's a 24-hour. Look at this. That's nice. That's a nice looking move there. We'll say Tama pump. I don't know. Let's see. Let's see what it's doing. I hope it does for everybody involved there that needs it to. I don't know. Gonna let that one. Okay, we're at the 6-1. Yeah. Just kind of trading sideways over the past week or so. So, yeah. Think Ape could hit $100 at some point this year. I don't know about this year. I called 25 to $30, but it's already been to 27, almost 28 is the all-time high. I think it could get past the previous all-time high, though. I do think it could get back into I think it could get into the $30 range for sure. Maybe 40. I mean, if we got into a real big bull market. It's going to run when we get back into a bull market, I think. I think Ape's going to be one to run. So I want to continue to add, but my thing is I was waiting for we had a nice little falling. I was actually happy about this falling down. If you guys have watched my coverage on Ape recently, I kind of played this one pretty nicely. So I was waiting for it to get down here to like 11 or 12. That's where I was looking to add, load it up again. So can you check out Guardian Token? guardianplatform.io and tell us what you think about the website. guardianplatform.io. Let's see. They're focused on creating the perfect integrated solution for crypto and digital asset. Okay. What are they trying to do? Monitor. Okay. Monitor your digital assets. Okay. Okay. Each component will continue through. Okay. They're actively collaborating with other projects and companies to integrate new solutions into their platform. All right. So why would you buy the token? Top gainers and losers, popular news stories. I'm not okay. Hold on. What's the white paper here? What are they actually doing? I don't know. Okay, it represents the Guardian platform. Gives users utilities, tools, and resources they need to execute their individual crypto strategies. Okay. You got to hold the token to use the platform. I see. Mm-hmm. Interesting. Okay, this is cool in terms of what they're offering here. Token strength based on specific criteria, personal risk assessment and evaluator, track big wallet activity in your projects, crypto portfolio builder and value tracker, live market crypto and digital asset news. Okay, so they're providing utility in the form of information. Makes sense. And access to tools. Interesting idea. I'd have to look into it a little bit deeper, but thank you for the donation, man. Yeah, Foxy says, nah. Yeah, I'm thinking that too. It looks kind of scammy on the surface here. I'd have to see the actual platform and what they're actually doing that nobody else is doing, right? Never held Saitama, but SafeMoon seems to have a similar story. The only thing is that SafeMoon wallet has started working a month later. Yeah, true. Samir, what's happening, man? Volt is pumping. Let's go. Crow tomorrow. I love it. What's up, Victory? Still Rise bullish. I'm bullish on Rise. Ever Rise. Elijah, what's up? What's up? Zach, will you do CA on ADA? Are there any other cryptos since the Fed report? Will I do anything since the Fed report? I mean, I've been buying, so I'm just kind of enjoying this right now. I'm kind of just enjoying the green right now, bro. For right now. I'm enjoying the green. What's going on with Zeldaverse? Hype dead or something? I don't know. Where's it at? Let me see. No, it's just trading sideways, man. It looks good, actually. I mean, dude, that's a hell of a launch. Look at that. I mean, it's got $11.7 million market cap. They launched 2 days ago. There's your 2-hour look. I mean, I think that's a great looking start. Great launch. Hopefully everybody did well with the launch and maybe has already taken their initial out. Whatever you do, always have a profit-taking plan. But it was a great launch. Glad to be a part of that one. For sure. Even Zelda's moving up a little bit. Their native token. That's up about 7%. Let's see. Oh, yeah. It's been bouncing. Somebody sold a shit ton right before Zeldaverse's launch. Stupid. And now we've got it all back almost. Or else we'd probably be in this like 2.6 range, 2.7 range. If we'd have just kind of flatlined like we were. But still, it's bouncing nicely, coming back. Let's see. I want to buy the first sip. Tomorrow's coffee is on me. Thank you, Casey. I appreciate that. Thanks for the $5 donation. Appreciate you. What's up with Shiptoro? Yeah, it's been taking a beating, man. Is it still down to like 2.7? Yeah, it's rough. I mean, what are you gonna do? I mean, it is what it is. I'm gonna hold it. It's down below $1 million market cap. They had some internal issues with a head dev who is since left, but it's gonna take some time for them to kind of rekindle what they had lost. A lot of investors were pissed off and left, and so they're trying to build back up that community. Their NFTs are coming out soon, but I'm way down on it too, so I'm not going to take a loss. I'm going to wait and see what happens. See if we can get a nice reversal. Can't win them all, but it's not a loss until you take a loss either. So I feel a new home coming with this next bull run. I like it, Stan. That's what's up, man. 3 earliest profit takes on buys you did during the dips. That's a good question. 3 earliest profit takes. Oh, like right now on buys you did during the dips. Oh, like where would I take profits now? I mean, I'm thinking about taking a little bit off Cardano right now because I added so much at like 79 cents. I'd have to look at it, Daniel, though. For real, man. I'd have to go. Let me see if I can remember. Cardano is one that comes to mind. I mean, Crow, I just loaded the boat, but it was at 30 cents, so I still need some time there. Algorand is up to 70 cents. Shit. I think I bought it at 65 yesterday. Nice. I already took profits on that ENS, bro. Where's ENS right now? Do I even want to look, Daniel? Bro, it's probably like at $30 or something. Oh, it's down. Dude, ENS is actually down. Way down, actually. Interesting. Think this is another swing? Daniel, what are your thoughts on ENS right now? ENS is reversed for now. Dude, is this an opportunity to hop in again, you think? 22.55. Can we get it and get it out of there at 26 again? What do y'all think? Big Fiji, thank you for the $50 donation, bro. Bandex on ETH just made a bullish reversal. Pre-sellers got wrecked. I love it, bro. Let's see. Bandex. Banana index on ETH. Let's see. Boom. Looking solid. Yeah, look at that. Love it. So I've got to go claim my Bandex still. I know they laid it out. So guys, if you're wondering how to claim your Bandex, BTFA, I got to go read this and actually do this. All right, Daniel, I appreciate it, bro. Let me know. Let me know if you like it on a swing back up. But Big Fiji, you're the man, bro. So BKX, guys, just listed banana. Will list Bandex. BKX is listing Bandex. This came out earlier this afternoon. Oh, excuse me. Earlier this afternoon. That was big. We talked about that a little bit this morning on the live stream. What's up, Anthony? How we doing, man? I do like Omi for long term. I do. Yeah, Ecomi. I like it. It's a good play. I can almost afford to fill my Jeep. What's up, Gio? Oh, Faye, that's awesome, man. I'll hop into Discord as soon as I get off, man. That'd be awesome if you could walk me through it, bro. That'd be awesome. I appreciate you, bro. Do you have time, Faye? Let me know, man. I could just meet you in voice chat in the Discord here in a few. I'm gonna get off in probably 2-3 minutes. Everybody listening on Twitch too, welcome. Super cool. I'm doing this for the first time, dual streaming, I guess dual live streaming on both platforms, so it's been cool. Awesome, Faye. I appreciate you. How about Tectonic? Tectonic in the whole ecosystem through Chronos has been crushing it. I got to learn more about it, to be honest. I need to make some time and learn more about what Chronos is doing. They're doing a lot of big stuff. Definitely. Man, I got a lot of people hanging out, though. I don't want to lose y'all. Hey, guys, if you haven't hit that like button, subscribe. Also, let's take a look at some of the other things. So basically, what do we got here? Elon. Did you guys see this stuff? I made the video about it right before I came on live. I don't know, seems kind of fungible. Freaking Elon, man. Just doing Elon things, right? Freaking nuts. Yeah, so the interest rate was raised by 50 points. Exactly what we expected. Interest rate went up by 50 points. Thoughts on Engine token? What's up, Mars? I like Engine still. And I'm just waiting for that game, bro. But yeah, it was raised 50 points, and that was to be expected. Then we got some pretty good news that we can expect that same move of 50 basis points over the next 2 meetings. And no signs of recession right now. I think those 2 things, the clarity on the basis points over the next 2 meetings and no signs of recessions, is why we're sitting pretty right now. Right? Matic, love it, man. Big Matic fan. Algo's back up to 70 cents. Where's Matic on here? This is top 100. I should be able to see it. Matic, oh, there it is. It's almost up 10%. Started the day at 106. Man, you could have swung trade on all of this stuff. If you'd have just bet that the Fed meeting was going to go well, you could have been swing trading just about everything in the top 100 right now. Look at CRV, Curve Dow token. That's up 18.5%. Rune went from 612 to 735. Tron has been on a nice tear. Look at Tron's up 29% in the last week. That's nice. Tron's been making some moves. That was listed in our newsletter this week. Comes out every Monday, by the way. Thanks so much, Elnai. I appreciate that. Thanks for being here. If you guys are interested in the newsletter, it's part of the Patreon package. Comes out 4 times a month, once a week. It's a $20 per month service. You get 4 newsletters. This week's was 15 pages. Actually talked a little bit about Tron as one of the blue chips to watch for. It's up 15% today. And then also, Discord access and access to our private community over there. We have great conversations, talk about new launches, swing trade opportunities, trading strategies, any tech help you need, all for $20 per month. And just, you have a network of people you can rely on and bounce ideas off of. That link is down below in the description if you want to check out the Patreon. Cancel at any time. Where do I see Dogelon going? I don't know, Boomer, but I'm willing to get on board and take a drive, I guess. I put like $1,200 into it late last year, and just kind of as a flyer, and just kind of see what happens. Have some fun with it. Yeah, Ada's looking bullish, guys. Even Sandbox is really on a nice bounce as well. But man, it was looking super bearish here in the week. It's down 6%. Even in the last month, this thing has come way down. It's still up 352% on the year, right? Because it had that huge pop late last year. As we kind of turned the page into November, it started going crazy, right? Topped out at $7.36. But here in the day, we're back up about 13%. ApeCoin kind of destroyed Sandbox into Decentraland, like out of nowhere, right? Mana and Sand. Mana's up 11%, though. It hasn't had as big of a pullback as Sandbox has had. And a lot of that, again, is because of Ape's dominance. ApeCoin is now up 13%. Damn. ApeCoin is rocking and rolling right now. Damn. I was waiting for it to pull back. So anybody tuning in just for Fed stuff, everything's over. But I'll recap that. I should be recapping that like every 10 minutes. Guys, keep reminding me to do that for as long as I stay. So the whole market is pumping right now after Fed announcement. Yes. So basically 50 points was expected. That's what we got. And the big thing was that they said we can expect the 50 points to be also there for the next 2 meetings. So that gave us some clarity. Jay Powell gave us some clarity in where we're going from here. He also gave us some clarity on the big talk of recession, right? That was the big talk of the town. A lot of people were saying, oh, we're heading for a recession. According to Jay Powell, he said, no, there are no signs of recession right now. according to J. Powell. Right now, there are no signs of a recession. So that was some other really good news that we got out of the meeting. Let me know in chat if you're a new subscriber. I definitely want to get to know you a little bit. Drop in chat if you're a new subscriber or new completely to this channel. And if you haven't subscribed yet, definitely do so. But I want to know if anybody's new out there. Let me know in chat. Just curious to see how many people have dropped in today, just stumbling upon the Fed news. And yeah, let me know. Let me know down there. So let's see. Higher interest rate may be causing people to put less money in crypto. I think it's just an overall having less money to spend. But yeah, I mean, there's a lot of factors. I mean, people are, maybe even spending more on their vacations now and like trying to do things and enjoy life a little bit more. And they're less concerned about saving and investing, right? Because they were like all, locked up in their homes forever. Now they're trying to go enjoy life a little bit. Maybe that's, there's probably a lot of things happening, right? But crypto's still pretty underground. We forget that. Crypto's still very underground. We live in these echo chambers sometimes because we're so invested in this, right? And I guess pun intended, we're so invested in this every single day. We forget that we make up a very small percentage of people who actually care, who actually know to care about crypto and about investing, right? Just turning in Fed meeting. Okay, gotcha. Kadena chart. Kadena. Where's Kadena? Is it up a lot? Let's see. Here. Blown up in Telegram. Telegram is just a lot sometimes. All right, it's up 11%. Kadena. Just outside the top 100. That's why I couldn't see it. Heading to Thailand in a couple weeks. Nice, Fear. That's what's up, man. I'm new. I don't know what to do. What's up, Joe Dirt? What's happening, man? Welcome. All right, we got some new people. Hey, boss, new subscriber here. What's up, the one? Nice. RJ Ferguson, first live chat. What's up, RJ? Cool. Is this good for crypto? At least right now in the short term. We'll see if it lasts. In the short term, though, it's good. We got some clarity. We kind of know what's up. So let's see. RL is a new subscriber within the last 3 days. What's up, bro? Greetings from Portugal. Keep up the good work. Awesome, Sandstorm Power. Awesome, bro. What's the secret to trading blue chips? Just put 1K as many as you can and keep trading on the green. Kind of. I mean, you kind of got to go like right now. It's interesting. I mean, in a bull market, it's easy, right? I mean, just throw a dart and whatever one it hits, it'll be up 8% or whatever, right? But in this type of market, you got to play the catalysts. So ApeCoin just had a big catalyst. Algorand just had a big catalyst, and it started spiking. Dogecoin, when Twitter was acquired by Elon, that was a catalyst. Like, you got to look for these little news events and things that move and shake the market and get in and get out. Just get in and get out of these little, upwards movements. But like Dogecoin popped like 25, 26%, right? On the news that Elon was acquiring Twitter. And it was funny because that morning I was looking at it. We were on live and I was like, oh shit. Well, it's a rumor right now. And Dogecoin's just up like 4% on the rumor. If this actually goes through, it'll probably pump a little bit. That's exactly what happened. As soon as the news came out, like it was official, Dogecoin pumped. And it came back down. And same thing happened here with ApeCoin on the other side, metaverse news, right? Same thing. So Roy says, I subscribed today, only click to see the Fed live. Not sure why I haven't seen you more. Well, that's the thing. I mean, the algorithm just works in weird ways. But Roy, I appreciate you clicking the subscribe button man, and welcome into the channel. And hopefully you get some value in a lot of other ways, man. But I was curious because we got a lot of new people, it seemed like, coming in listening to the Fed conversation today. So I was just seeing how many people were new subscribers to the channel. Here's another one, new subscriber from England. Nice. Chris, I saw it and added a bit to the bag only after it dropped enough. Nice. Which one? Was it? Oh, wait, you were talking to Chris somewhere up here, huh? Okay. Must have been talking about one of those three we were saying. Don't sleep on this, guys. SAPE is quite amazing. Consider adding it to your portfolio. SAPE is the hidden gem in 2022. We were just looking at SAPE. It looks really solid. Easy 100x from here. Crazy rewards just for holding. Foxy, 50 basis points was already priced in. If it were higher, the market could react differently. Yep. What's up, Michael? What's happening, bro? New from Finland. What's up, Timmy? Let's take Zeldaverse to the next level. It's looking good right now. Look at that. Oh, we're getting a pop. Just got a pop on Zeldaverse. Oh, no, that's Zelda. That's Zelda Inu. Zeldaverse is over here. Yours on the other. Yours on the other? Oh, it was about ape. Okay. Still holding Saitama. Very, very small amount, bro. I took a lot of profits. I took a lot of profits, man. I turned $3,200 into, I don't even know at its peak, 65 grand. I mean, who wouldn't take profits? And if you haven't, hopefully you learn from your mistakes, man. $3,200. I mean, that's all I could afford to put in at the time. That was big, man. That was big. The meeting has started. It's already over. If you want to go back and watch the stream, we covered it. We covered the whole thing. So, yeah, King Perp, we were on here for 2 hours, bro. Yeah, the meeting is over. 50 basis points was the move. That's exactly what we expected. And one of the reasons why we're seeing the big pump, we got some clarity that 50 basis points would be, probably what we see the next two meetings, at least from Powell. And he also said there are no signs of recession. So that was big. That was a big question that a lot of people had. It's on Kronos, one of my favorite blue chips, hands down. I have not sold my position on Zeldaverse. So what I did was, on Zeldaverse, I got in early. I about 2.5x'd, and I took my initial out. And then it kind of leveled off for a little bit, and I decided to add another position in it. So, which is up right now. I got it back in at around like the 13 range, somewhere in here, 12 or 13 range. So I didn't get it as early as I wanted to. I couldn't fight all of the traffic on Uniswap or PancakeSwap when it launched. But Ish, welcome, bro. Just became a YouTube member. What's up, bro? Zach is the real one in these crypto streets. Appreciate that, man. Appreciate that, Frieza. Will Bitcoin hold? Thoughts? Let's see where we're at, bro. At 39.9. Yeah, we're still up. I mean, here's the thing. I mean, Bitcoin, it's been here before, right? I mean, we zoom out 90 days. I mean, there you go, bro. I mean, we've just been trading in this tight range. We started 36 on the beginning of February, 36.6. So, I mean, you see that 36.6. It's at 39.8 right now. I mean, we've gone up and down, up and down, up and down. We had this big pop actually in March, beginning of March. We got all the way up to 47. That was a big run up from 38. That was a big run up, and that was right before Bitcoin Miami, and then it started coming down during Bitcoin Miami, which was kind of weird. It was market manipulation by the whales, Roy says, Saitama was my first Bitcoin, had 160K at all-time high, and it only took 20K. Hopefully I've learned for next time, but greed gets you when she moves. Yeah, Roy, listen, man. Have a profit-taking strategy in place and just pinch out a little bit every single day. You can watch the chart and do it responsibly and still hold a nice-sized position. But every single day, just drip a little bit. When that thing's going up like it did, I mean, it was going up like crazy, man. I mean, for me, you have to be crazy not to slowly take profits out of that. Or else, I mean, what can happen is what happened. I mean, let's just face it. It's possible, and it's very possible. What happened with Saitama is it came crashing down hard. What goes up that fast is going to come down just as fast, if not faster. Remember that. So, Crypto Caddy, what's happening, bro? Shibnobi up a little bit today? Are you getting looking into Fame Coin? Haven't heard about it. Feeling bullish. What's up, Richard? All right, guys, I'm getting a little tired. Where are we at? Ooh, Gala's back up. 15 cents. Gala's moving. AVAX is up 15%. What happened to ADA? Why do I keep losing ADA? APE's up 14.8%. Where is Cardano? Cardano. Why do I keep losing it? I got to refresh. There she is, way down in the corner. Still up 13%, 87 cents. Yeah, I'm holding Volt. Yeah, the news today, man. Powell moves the chart more than Elon. 100%. I mean, when he said no signs of recession, everything started popping. And then when he said 50 basis points expected for the next two meetings, those two things to me were the big ones. I feel you, Holiday. I feel you. I didn't from Shiba back in like October because most of it was locked up on Earn Pro. I hear you, Sandstorm. I mean, that's cool. I mean, listen, I made the same mistakes. I mean, I've stayed in positions longer than I should have too. I mean, we have to make some mistakes along the way, but all I'm saying is I've learned from some of the ones in 2021 and, just continuing to, make better plays now that I know what I know, right? You don't know things until you know, right? And then you can adapt. Banner. Let's see. We'll take that out of there. Okay. All right. All right, y'all. I'm going to close up shop. Great live stream, up over 2 hours streaming with y'all. It was fun listening to J Powell and breaking it all down. 2 long streams. I'm tired, though. It takes a lot out of you. So thank you all so much for tuning in. Make sure you hit that like button on your way out. Subscribe if you haven't already. And thank you all so much for tuning in. Appreciate it. Have a great rest of your night or day, wherever you are in our world. And I'll see you all tomorrow. We're back live tomorrow morning, 9 a.m. Eastern. The crew from WAGME joins me tomorrow. Some big news to announce from WAGME tomorrow. Don't miss it. First Sip in Crypto coming at you live, 9 a.m. Eastern tomorrow. Big news from WAGME. Again, don't want to miss it. So we'll see you then. See you tomorrow. And take care, everybody.